Good morning and welcome to our live stream. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. And today is the 15th of January 2024. Just going to go ahead and bring up some disclaimers. Okay, so we'll start off with a high risk investment warning. Keep this on screen for a few moments. All right, and let's just go ahead, bring up the market commentaries disclaimer. Okay, excellent. And what we'll do is we're going to start off by looking at what we call the real rate. And what we're looking at is the 10-year real rate. It's effectively your US 10-year minus the break even. That will give you the real rate. And we want to just get an idea of the direction of the real rate. And I've got some basic trend following indicators. We've got the exponential moving averages. We've got the RSI. And you can see that the quicker exponential moving average, the green quicker, is below the orange. In effect, have a downwards bias in the 10-year real rate. And if you take a look at the RSI is below 50. Okay, so by and large, the rates are coming down. At least face value, that is the okay. We'll just add in the border. Yeah. All right, so you can see that the real rate's moving down. So what's the big deal about that is that the real rate's a key driver of the market. Effectively, the rates are coming down because there seems to be an idea that inflation is moderating somewhat and that the Fed will shift its policy stance from a restrictive policy to a more accommodative policy over this year. And the idea here is, let's just put in the US dollar underneath. So I'm just going to click on plus. And just click on, just choose US dollar. So we'll use the CFD, just bring that into a new pane below. As the previous to this, you can see that as the real rate moved up over here, well, guess what? The US dollar moved up. And we can take a look at this in a closer type of correlation, but actually using the correlation coefficient. So just go through to indicators here. Click on correlation coefficient. Okay, so I'll just type that in. Correlation coefficient. And what we want to do is make sure that we're looking at the real rate to the real rate to the US dollar. So just go ahead and type in US dollar here. Try that again. Correlation coefficient. We want to just choose the US dollar here. Okay, that's better. And you could just see that the let's just bring in the real rate. So it's US even. So just go labels, indicators, the value, 87%. So the closer it is to one being 100%, the stronger the correlation. Here we've got a very strong positive correlation. It's telling you that the real rate is a key driver of US dollar. We're looking at this on a weekly chart. So the fact that the real rate's coming down and the US dollar is coming down is something that we need to take note of. Now, what we can do is just we want to look at this more in a more immediate time frame, because that's what's going to go from weekly to daily. And what's interesting here is you can see that the real rate's gap down. So you're getting a bearish cross of the green 5-period exponential moving average, moving below the orange 10-period exponential moving average, and the RSI dipping sharply down. So the real rate's coming down, and we know that there's a positive correlation. Let's go see what the US dollar is doing. If the real rate's coming down, I would expect that there would be a downwards pressure on the US dollar. When I looked at it this morning, it wasn't quite as obvious. So what we'll do is we'll bring up the US dollar. Sorry, I'm just showing it again. All right, let's just bring up the US dollar daily. Yeah, what we have here is now two Bollinger Bands. We've got what we call Zone 1, that's between the upper blue and the upper red. We've got Zone 2, which is between the two blues, and we've got Zone 3, which is below, which is the lower blue and red. Now, remember, we just saw that the real rate was coming down. So if the real rate is coming down, we would expect the US dollar to comply, because the correlation curve is strong there. So what I think we can do is we can put a resistance area over here. Okay, let's just adjust the colors here. So we'll make this red, just because it's a resistance. Let's make the background red as well. And the idea here is, well, if we've got this resistance, why are we looking at it in resistance? Because we're going to just, I'll go back to the real rate. Real rate has gapped down, and we saw that there was a strong correlation coefficient, right? So the idea here is a movement from Zone 1 to Zone 2, from the upper red, upper blue area towards the area between the two blue bands, would be something that would be sensical. At the moment, we don't quite see that. So what we can do is we can go down to the hourly time frame and see if there's any resistance, any key areas to keep an eye on the hourly. So let's go through to the hourly. And it's quite challenging here. It seems to be that there is, in my opinion, some sort of ambiguity, because the stochastic. So this stochastic, let me just show you what the setting is with the stochastic. It's the 1555, and effectively the stochastics moved into the 70 plus area. So it's moving into what we call the upper sort of upper parameters. If it reaches 80 and above, it goes into the upper quintile. We're getting towards sort of upper quartile here. If in that sort of upper quartile area, so here's an example. There's actually two examples here. Upper quartiles, upper quintiles, you kind of get the US dollar moving upwards. Now, I'm a little nervous to suggest we're going to stick around in the upper quartile region, upper quintile region, because of the fact that the real rate has come down, because that real rate has gapped down. So if that's the case, we've got the resistance area. Let's put resistance in right here. Okay, so I'm not sure we've got for that for an upwards trajectory in terms of the dollar. Suggest perhaps that the movement will go back into zone 2, and if that's the case, it would be complying more with that real rate. Remember when we looked at that real rate, I want to just re-emphasize it. It gapped down. I just want to show you that that gap down again. Okay, here's the gap down. Okay, the real rate gapping down, and we know that there's a strong correlation coefficient. All right. If we start seeing a gap down in the real rate, what's going to happen, say, to a commodity like gold? So let's do a similar analysis here. Let's go through to the weekly chart. Okay. And what we're going to do is we're going to put gold underneath and see if we can pick up some sort of correlations between the real rate and the gold price. So first things first, let's add gold to this. So just click on plus. Go through FXCM CFD. All right, a little bit more difficult perhaps to see the correlations here. So we've got an upwards movement here in the real rate, and we've got the downwards movement over here. Let's see if we can pick up anything else. You can see gold's moving here. We do movement over here. Okay, so there's the so it looks like this one's inversely correlated, doesn't it? Okay, as opposed to positively correlated. We can even go further here. Okay, here the real rate picks up. Again, as the real rate comes down over here, so we can see that gold gets supported here. Let's go ahead and put in a correlation coefficient just to see what the correlation is here. So we'll click on indicators. Let's put in a correlation coefficient. Okay, let's put in XAU USD here and see the correlation. Okay, not surprised, is negative. So what we're saying here is that gold will tend to move in an opposite direction. Not quite as heavily correlated, say, as the dollar is to the real rate, but there is a correlation and it seems to be picking up. So what we can do here is we can remove the drawings. Let's go ahead to the daily here. Again, we've got the real rate gapping down. If the real rate's gapping down and we've got a negative correlation, one would expect gold to be supported. Let's go ahead and take a look at what's happening on gold. Okay, so we're going to change this from the US dollar to gold, and we're looking at the daily chart of gold. Remember, real rates coming down, so potentially some sort of support up for the US dollar. Now, we did see that the US dollar was heading towards that resistance. If that acts as a key reaction level and we do see US dollar moving down, I would expect to see gold moving from zone 2 into zone 1, moving from the region between the two blue bands going into zone 1, which is the bullish area. That's between the upper blue, upper red. So the gap down seems to be having more of an influence on the hourly chart. See if we can pick up anything there. Just before, you can see the RSI popped above 50, right? So the fact that we've popped above 50 is in of itself a bullish development, right? It's in of itself a bullish development. Let's go down to the hourly chart, see what we can see there. All right, bringing down in the real rate. Let's just go through to the day into zone 1, moving from zone 2 into zone 1, and we'll see the RSI popping above 50. So again, it's all stemming from the relationship that we have with the real rate. And the fact of the matter is that real rate seems to be pushing down now. That seems to be the tailwind. That seems to be the key driver of the market. Let's take a look at another chart. Let's take a look at the real rate and the NASDAQ, and then we'll take a look at the real rate and the DAX, and we can probably wind up for the day. So let's just take a look at the real rate on a weekly basis. So we'll go through to a longer term view. And what we'll do on the longer term view is draw in the NASDAQ underneath that. So we'll just put that in as NAS 100. We'll be looking at the FXCM CFD. Okay, put that in underneath. And let's put in a correlation coefficient. And there's a strong inverted correlation here. It breaks somewhat between May and November, but it's gone back into a negative correlation. We're at minus 82%. We within the bands of plus 100 and minus 100. The closer we get to minus 100 here, the stronger the NASDAQ to be moving up. So we take a look at NASDAQ in terms of the daily chart. Let's do that. Taking a look at NASDAQ in the zones, you'll see that it is moving towards zone 1. So again, the real rate moving down. It seems to me that just to reiterate, there is a resistance on the US dollar, a tailwind on gold, testing the boundary of zone 2, zone 1. Looks like it's moving into zone 1. And you can see that the RSI has gone into the positive side of 50 again. Well, if we go down to the daily chart, and what we'll do is just see if there is some sort of opportunities on the hourly chart now. I'm going to share that tab for you. And you can see that on the NASDAQ, take a look here, we've now got the starting to develop that angle and separation to the upside. What about the stochastic? Stochastic's moving into the upper echelons, and if it holds, okay, then we potentially get that swing and some sort of movement up here, and that would bring us in line. That would bring us in line with the fact that the real rate is dropping. Let's take a look at one more chart. Take a look at the DAX, and then we'll end off for this morning. All right, so just going to bring up the weekly chart of DAX. We'll look at it with the bands as well. I'm just going to share the tab, and you can see that the DAX, the Bollinger Bands are squeezing. So we are moving sideways. We've lost the volatility in the DAX. There is positivity here. Why do I say that? Well, we've got the RSI above 50. That's on the bullish side of 50 on the RSI. Now, if we see an expansion in the Bollinger Bands and we move into zone 1, that's between the upper red and the upper blue there. But in order to really measure that, it's worth going down to the hourly. So I'm just going to bring up the hourly of the DAX, and we'll just see what kind of signals quite as just share that tab over here. We did move towards the upper quartile. As long as we hold in that upper quartile, we'll get some sort of movement up here. So if we drop below the 70 line and we actually get a bearish crossover here, that would be a negative development. Ideally, what we want to do is we want to see some sort of support coming in here. Okay, so we are at a support level. We want to see the show angle and separation to the upside, and we would want to see the stochastic maintain in the upper quartile, upper quintile. The question is, why? Why would we want to see that? Because the key driver of the market is rates, and we have seen that the real rate has come down. Real rate is inversely related to the risk side of the markets, and if it's inversely related to the risk side of the markets, we would expect some sort of support to come in for the DAX. Okay, that's where we'll leave it for this morning. If there's any comments or questions, go ahead and type those in. If there's any comments or questions, please go ahead, type those in. I'll just wait a few seconds. All right, nothing coming in. So we can wrap up here.